Welcome back, everybody, to How to Invest. Just wanted to make another video to show you kind of really how Playboy is making their money and how they will continue to make money and continue to grow their sources of income over time. Here I got up the company that acquired them via the SPAC deal. They were a blank check company. Can't speak today. Mountain Crest Acquisition Corp. Not a great sign that their stock price isn't updated on their website. It doesn't look like they use it too much. But here they have two presentations that they put together for the investors, just kind of where they'll be going over time. This one is from October, so we'll do this one first. And let's get into it. So it starts off with some legal stuff. We don't need to get into that. This is the transaction summary. Playboy acquisition $8 million equity of $239 million, so they were worth $239 million before the deal, but they had $142 million worth of debt. So the entire value was $381 million enterprise value. Playboy is rolling 100% of its equity into Mountain Crest Acquisition Corp. So it is controlling the whole company. The transaction includes $50 million common stock PIPE at $10. So the people getting in from Mountain Crest Acquisition Corp got in at $10, which is pretty common for most SPAC deals. The only one I can think of that wasn't $10 was Bill Ackman's for some reason. It is called Perishing Square, I think Investing Group or something like that. And they debuted at $22, but I think it was just because of his reputation for some sort of reason. I'm not quite sure if anyone knows about that. They can shed some light on it. And then it says Playboy agreed to purchase $700,000 or $700K sponsor to promote shares at $6. So they're just putting in some advertising, or not advertising, but like an outside source to promote the shares. The pro formula capitalization of $373 million, enterprise value of $413 million. So it boosted up the enterprise value. Playboy owns 66% of the combined entity on a fully diluted basis. $101 million new cash on the balance sheet. So they raised over $100 million, which is good for operating expenses, to grow the company, to increase sources of income, to try and explore new avenues by either expanding themselves, or they could acquire other companies that are in growing fields, which I think that they'll do quite a bit if we get further into it. And here are some of the numbers on some graphs and sheets we just went over. Playboy is a massive consumer lifestyle platform, 3 billion consumer spend. Their biggest areas is men's apparel in China, so men's clothing is their biggest market, which kind of makes sense. There's a lot of people in China, and clothing is kind of their main source of income right now, just because they're producing a good amount of it, and they're really trying to compete in just that space and be in sort of the higher end, but not too expensive. So here we have some graphs on EBITDA. So Foundation set to achieve 100 million in adjusted EBITDA by 2025, which I think is even a little bearish. I think they might be able to beat that by quite a bit. And of course, this was made almost 6 months ago now, so they do have to adjust their numbers, because I do think that they've seen quite a bit of growth in the time since they've made this. But this starts in 2017. review and cleanup. They established foundation 2018. They tried to build up the brand and business back up in 2019, 2020, and then they're expanding in 2021, which I've really noticed because I didn't see too much of it in 2020 or 2019, but I've really noticed to see just kind of everywhere I've been looking, I've just seen Playboy recently. Whether that be on social media or stores that I shop at, it's just been there. And just a wide variety of things. Management. So this is adjusted revenue growth. They're expected to almost double from 2019 to 2020. And this is doubling EBITDA growth. More than doubling, so over 106%. So they're trying to create a culture where all people can pursue pleasure. This is kind of what I was saying in one of my past videos. I think it was the one that I said that this stock will double soon. I think the price was around $12 when I made that video, maybe a little bit lower or a little bit higher. But they are just trying to promote sexual freedom for mostly the female gender, but men too. Just on, being more open and being able to talk about it, and other sorts of stuff along those lines. So here we have the pleasure lifestyle platform. They have what they sell. They have sexual wellness, intimacy, lingerie. They have fashion and accessories. They have digital gaming, hospitality, and alcohol. They have fragrances and skincare and cosmetics. I was actually doing a survey recently, and I noticed that Playboy had quite a selection of different colognes, which I thought was interesting. I didn't even know that was a source of revenue for them. But you can see here kind of what they sell. So they sell CBD, furniture, skincare, advocacy, jazz clubs, arousal cannabis, which is kind of the CBD, condoms, intimacy kits, and kind of education. And here are the kind of 4 main brands that they're kind of trying to expand into. So if we look here, sexual wellness, intimacy products, including condoms, lubricants, wipes, CBD products, e-commerce. So they're really trying to focus on their website and getting sales from there, so they don't have to wholesale to other companies and losing. This just ends up gaining more profit margin for them, which I think is a good thing. Focusing on shipping directly from their website. Their style we don't really need to get into, but I think the really big one that a lot of people aren't talking about is gaming and lifestyle. Digital gaming, casinos, and just overall betting in general has a really, really big future, especially in America, just because so many states are adopting to legalize it, and I do not see this trend reversing. So I think they're trying to hop on this and stacking up cash flow, being able to buy growing companies and bolstering their own facilities, I think is a great idea. Of course, alcohol they're really trying to get into. That kind of goes hand in hand with gaming and gambling, and home and art, kind of like exotics and higher end quality things. Beauty and grooming, they're going for, like I said, the fragrances, cologne, and perfume, CBD-based bath products, skincare, and other such things as that. Here we have diversified offerings, represent massive market. Sexual wellness, we can see the 4 different groups that they're going for and the growth. So by 2024, these are the numbers projected. So sexual wellness will be over $338 billion market. And they have only 100 million in this, so if they can capture just a good chunk of that, which they said in the interview with the CEO that it's a pretty diversified market, that there's no one person taking sharehold. It's a lot of like scattered pieces, he would say, and they're really trying to get their foot in the door with there. Style and apparel is, of course, a huge industry, and it's 1.9 trillion. Just in 2020, revenue sales were 2.7 billion, which is only expected to grow, especially because China is a growing market and more people are growing out of poverty, and being able to purchase more and more clothing, especially, is one sign of wealth, I would say, is probably the first sign that most people would experience. Clothing, transportation, gaming and lifestyle is a $1.4 trillion industry, and right now they're only generating $52 million of revenue. But if they're able to expand their market capital or their market share, they will easily double this number over the next 4 years, if not much more than that. And then the beauty and grooming, which I think is a really growing industry, especially for both genders, is only 16 million right now, but I think with some acquisitions that they would be able to purchase with some cash on the balance sheet, which they would be able to acquire pretty easily, would really bolster these up, especially with the growing industry. If we look here, building upon high profitability, they are going for multiple monetization models, so licensing fees, O&O products, and digital subscriptions. So they're really just trying to offer a wide array of making money and just keep that positive net cash flow rolling in so they can really reinvest it in the company. This says that combined with an owned marketing platform of 50 million organic reach, 200 million influencer network, and 3.5 million active consumers. This equals low cost, accelerated, efficient products, lower consumer acquisition costs, and high consumer LTV. So right now they're shifting from a licensing model where they're putting their products in other stores, such as Misguided, Paxone, and they are expanding to an O&O expansion, which is a transition into to capture a greater share of 3 billion global consumer spend against the brand. Geographic expansion in U.S., Europe, and Asia. Asia especially is a growing market. Captures revenue per unit sold, generates valuable consumer data insights. Organic social media. Social media is a big one. I think that they have a lot of opportunity here to expand, just because there's so many different ways to make money on social media. I think they can really take advantage of it. So core licensing and business generates massive contract cash flows. Like I was saying, the amount of different revenue streams that they have will be able to generate huge amount of cash flows over the years, which I think these will even increase. So right now, this is just showing that Playboy is growing as a consumer brand. You can see that it's the 17th most popular as in 2020, and it's only growing in the past years. And I bet it was probably in the top 10 for much of the 80s, 90s, and 2010s, but kind of fell off for a little bit there. So this is kind of just what I was saying. They're trying to build many different sources of revenue and ways they can do that. They have the different stores that they're selling into. Is only expanding over the years. You can see much more stores than in 2018. Acquisition strategy. This is probably my favorite slide on the entire presentation. I just think there's so much room for expansion and so much room for growth here. And there's a lot of good companies that I personally use and would love to see them buy. Two of these being in the grooming section. Harry's products. If you don't know, they're for shaving. They ship you products straight to your door. Pretty good, reasonable price. Great products. And I've always really enjoyed them. And then Manscaped. I've always wanted to buy one just because I think that it's a great idea, and I do use an electric razor right now, and it's not the safest, but I have always wanted to invest in one of these. I think that'd be a great addition because I've always seen their advertisements more and more. It seems like each day, just across YouTube. Some of these other companies I'm not too familiar with, but if they're anything like these two in the grooming section, I believe that they would be great additions. I have heard of Cookie Demar. That's a pretty big company. Misguided, I know they work with them already, and I know that they would love to buy them outright to be able to expand their margins. If we go on further, we can see that they acquired Yandy, which is a growing company. You can see that their year-over-year growth is 37%, and for EBITDA, it's adjusted, it's over 157%. So that seems like a pretty good acquisition. This is the management team and the financial overview. We'll go back here. You can see 2018 it had 78 million. In 2021 it will be over 160, so it's over a double up. And per terms of EBITDA, so adjusted basis, it will be over a triple. So not only are they growing money on the top line, but they're growing on the bottom line, becoming a more efficient company as they grow, which is always a good sign. I do really enjoy this management team. If you guys want, I could do a full in-depth video on just some of their history. Near-term drivers for growth, transition to consumer products, the acquisition of Yandy, sexual wellness was a big one that I've been saying. 2021 assumptions is continuation of the transition, increasing Playboy sexual wellness products, so just increasing what they're able to provide for people. Growth in licensed and owned digital gaming, continued expansion for new geographies. So just like I said, continuing to find new ways to make money and new products. These are the EBITDA targets. You can see in 2020 it is 24 million for the bottom line, and by 2021 they are expected to do 40. So almost, I would say, about an 80% increase, which is very, very, very rapid growth. This is another slide on their target to get to 100 million of adjusted EBITDA growth by 2025, and how they're going to get there. These are the key assumptions. They really think that the sexual wellness brand will really increase, and the trend will increase by more and more countries becoming independent. Gaming and lifestyle, they really think that the gambling trend will increase. Style and apparel, I could say this one I've definitely seen the most, that their influence on younger people and willingness to wear the clothes, and just the overall thought of the company is that it's a pretty cool brand to wear, is what I would think and have seen. And then beauty and grooming, I think, is an undervalued one and overlooked. Summary, kind of just what it is. The appendix. So these are kind of the numbers that they're going off of. You can see in 2018 to 2024, they're growing about almost 50%. This is for global apparel. They're growing at quite a bit, steady increase. Global lifestyle, great increase, and the beauty and market. They're all growing markets, which is good to look at. These in graph forms, kind of where they're growing their money, either from digital experiences or direct to consumer. You can see. And this is a spreadsheet on just kind of comparable companies benchmarking. If you want to take a further look in that, pause the video. Consolidated adjusted revenue reconciliation. So on GAAP adjusted revenue for 2018, it was 100 million. 2019 it was 94 million, and year to date it's 59 million. So for the first 6 months of 2020, they are on track to overbeat 2018, which was their highest on this list, which is a good sign. And their adjusted revenue is almost as much as the entire year, which is just a great sign for the company. This is some more. You can see that they were audited in 2018, and these are their numbers from 2019 and 2020. Just in the first 6 months, they are doing almost what they did for the year, if not more, in 2019. This is Yandy. You can see their growth numbers and their consolidated income statement, the balance sheet, and that is it. I was going to do both presentations in one, but I think I'll take a break and do the other one in a separate video. Thank you all for watching, and come back for the other presentation.